Alright, y'all, I'm back. You already know, another video. Alright, so let's get into it. I'm actually kind of pissed because I recorded a video already and it did not have the whole fucking screen in it. So, you know, it was 15 minutes and I'm kind of pissed off about that. But I deleted it and we're back to it. Alright, so if you remember last week we were talking, we got this buy and then this double bottom that came up here. As we kind of expected it to. Like I told you that we were possibly going to see a buy here. It was kind of unlikely, but if we did see a buy that broke past this, taking out this high, then we were going to see extreme buy after that. Now I didn't mention too much about it, but I did tell you that I probably would get out, take profit somewhere around this area. As we scalped it up throughout the week, it kind of gave us the opportunity to do that. But as you can see, we got the double bottom here, a little buy off of it. Now, what I want to talk about this week is why I didn't think it was going to go too far past this. Last week we got some buys, some good profit made out of it. We can go down here into the 1 hour really quick and let's talk about it just so we can have a recap. I'm going to run through it really quickly though. So my very first trades after we talked about this buy that happened was this sell that took place on Monday. The sell on Monday gave us $100 that we were able to withdraw, taking into account from $32 up to $153. We withdrew $100 to have $53 to play with. We immediately took this buy. This buy took place almost simultaneously with the day ending, at which point in time we got this extreme buy up here where it was not just one trade, but we continued to kind of compile into our trades, or compound as they would call it, at which point in time we got to the top of this. Now we took profit somewhere around here where you see this ellipse is at. Alright, and then we made $300 profit, so we withdrew $300, 305 to be exact, leaving us with $83. Now I gotta tell you guys, I got slaughtered in this little bullshit of a consolidation that happened here. I got slaughtered in that shit, and this is a very good indication to let you guys know not to trade consolidation. Make sure you're very wary of it. Usually going to get consolidation after you get some type of move like this, and then a really huge move. Excuse me, guys. But you're going to get some type of consolidation. It could be really big. As you can see, that you could really scalp this and bounce, right? But nonetheless, you wouldn't have even wanted to trade this, right? So let's get rid of this. But nonetheless, yeah, that account, we had $83 in it left after we withdrew a total of $400, and that account got totally blown. But it's okay though, because from making the $400, we have the ability and the opportunity to reinvest in ourselves, as well as maybe even reinvest into another opportunity, which I'll talk about at the end of this video. So, and that's going to be just to let you know, with the prop firm, that's going to give us money to trade and use our talents to make more money. We'll have more buying power. Obviously, we have to make sure our risk management is on point, but you have to do that even if it's with your own account, so it's not a problem at all. So what we're going to do is we're going to talk about how, even though this consolidation happened, we did get up to this point that we marked, if you guys remember, right about 4010, where we got the sell-off happen. Now, if you're wondering why this box is here, that's going to be easy to tell you. So if we go back to, like I said, the daily, which is important to do, make sure we're considering higher time frames. What we got to look at is the sales leg that's here. It's very important that we look at the sales leg. I also use what's called a Fibonacci tool to measure the retracement on the sales leg. So let's look at what happened here. We got a sales leg that came down, and the sales leg is going to be one whole leg that takes out a low in this situation. We took out this low, took out this low, and yeah, that's what's relevant right now. So we took out these lows with this sales leg. So we can measure this on the retracement, where we're going to get a bounce, another bounce, and then up here to this zone, which is negative, which is 61.8%. Okay, so this is the ideal area between 61.8% and 72% that we're going to want to sell from on a sales retracement. All right. So what I did was I just highlighted that area, and what it does is give you an opportunity to see, okay, what happened. We got a buy in here. We got additional confluence with a resistance that we marked up already that's here, right? And it came up and touched that resistance. I don't know if you guys see that, but almost spot on. Touched that resistance and then sold off, right? So based off of the sales leg and the retracement, I don't care what this candle pattern candle pattern says at this point. We have a very strong resistance, being a daily, where as you can see it closed below the daily line. Both of these candles, we got a little wick up here, but that's just information that let us know where price went, and then we started selling off. So this week I'm expecting big sales that take out this low and this low and this low. They ask me why. Well, typically when you get a sales retracement of 61.8%, you're going to see it go through all the way 100%. Not always, but you get your opportunity to see your areas to take profit. So if we were talking about taking profit and holding a trade, which we don't hold trades, we scalp intraday just to make sure we get the best money or the most money we can. We're going to have this is take profit 1, this is take profit 2, negative 61.8%, that's take profit 3. And there's an analogy like in basketball that when you shoot a ball, it bounces at the same angle that you shot it at if you miss it. And that's where you can kind of see that rebound happen. Well, it's the same thing here, is that this will be my ideal target where I'm ultimately looking for it to go, which is take profit 3, and then mostly take profit 4, which would be very, 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 tough drop. Let's just call it that. It'll be a tough drop. So nonetheless, well, one person or someone may ask me, what makes me think it's going to do that? Well, if we go back to the previous sales leg, and you could back test this. This is me giving you, free game, if you will, with a Fibonacci, and run your Fibonacci here to the bottom of this sales leg. See, this is the bottom of the sales leg because we got a candle here that is not a red sales candle. You can see we got a sell-off, right? A bounce at 38, another sell-off. Almost the same double bottom pattern as you see right here. Bottom, bottom, right? And then a buyback to what? 61.8%, right in between here. But as you can see, we got a wick and a wick right in this area. And then begins the sell-off of this previous sales leg. Now, how far did this previous sales leg go from 61.8? All the way down to 1. Negative 1%. I'm sorry, negative 1, which is a negative 100%. So in that case, when we can see the previous sales leg did that same thing, gave us a double bottom, at which point in time brought up to 61.8% and then sold back off to negative 1%. Is it safe to say that if we go back here and measure this sales leg to this sales leg, to the bottom of the sales leg, that we can't see this 61.8% retracement that had confluence here by closing under the daily candle and then off of this previous resistance as well there? Is it not safe to say that we can see price push down to 34.41 or even more, as we just seen it go 100% retracement, negative 100% retracement, get a negative 100% retracement here as well? So seeing price move for the week, and this is just an estimation of 690 points. Yeah, I think that is a very big opportunity that will come up. And yeah, so that's what my analysis is for this week. And we're going to see the bears come in and really take hold of this market, pushing the actual price of the market down. probably much lower than is expected by most people. And if we look over here to the history, because it's important to do that, we're going to be retesting the levels of coronavirus. As you see right here, February 21st of 2020, we got this very strong sell. So to me, if we're saying that we're still in the bull market, which right now it's a little tough to gauge, to be honest with you. When we get into this zone, this area here, from literally from 38.2% all the way down to negative 1%, from negative 38.2% to negative 31, negative 1%, 100% on the extension, we're gonna see price go crazy, where we'll see this kind of whipsawed action. So to be honest with you, my safe take profit would be here at negative 38.2%, just because when we look at the history, we got strong sales at this point below 61.8%, and then we also got a lot of back and forth here as well below the negative 38.2%. So I would take that as a safe target. But do I believe personally, based off of the edge that I have, knowing the way that the Fibonacci works with and Confluence with a couple of other tools I have, I do believe that we're going to see price by the end of the week get very close to 32.71, which is where it was pre-COVID, or a little bit higher than below them, a little bit higher than where it was pre-COVID. So just take that in consideration. And yeah, so that's going to be my video. I didn't want to make it super long, like the last minute video was like 15 minutes, but this one I'm going to keep it kind of short. I do got something to add in, as I talked about being able to get into a prop firm. So let's just jump over really quick and do that. So the prop firm that I'm actually referring to is going to be My Forex Funds and their accelerated account. So what we're going to do is we're going to actually get into My Forex Funds. Like I said, we made profits off of from $32 to enough to where we can get into My Forex Funds. So we're going to get into this program. They do have, if we go down here, different plans depending on your situation. What we're probably going to do is this $5,000 opportunity here for $245, because to be able to reinvest into yourself after you've made a certain amount of money inside of the market is important. I could either put that $245 back into my personal account and have very little buying power, or I could put this inside of a company that will give me $5,000 to trade, at which point in time I can use their funds to be able to leverage and make more money for myself to increase my profits on a daily or weekly basis. All right, so they also have a few other things that we can talk about. So one of the things is you're paid 50% of your profits generated on your account every week. Your account must be 5 days old in order to be eligible for a weekly payout. All payouts must be requested before 3 p.m. and also take 1 to 3 days to be able to be processed. They also allow you to request payout by bank transfer, cryptocurrency, so you can use Bitcoin and that type of thing, TransferWise or PayPal. Now, also, they do have some rules. You can't go more than 5% drawdown overall, so no daily limits. Also, they have leveraging up to 1 to 100, which we're going to stick with the 1 to 50. As you see here, is what we're going to do. You can scale as well every 20%. So let's say on the account that I'm going to do, right, when you make $1,000, or is it 1,000? Let me see. Yep, when you make $1,000, or your account balance goes up $1,000, or actually it says here, not even 1,000, so 10%. When you go up 10%, so if you make $500, they're gonna double your account. So you're gonna go from $5,000 to $10,000 that you're able to use for buying power. At which point in time will also raise the amount of how much it is that you have overall drawdown, because you'll go from only being able to lose what you put in, $250, to being able to actually have more of a drawdown of 500. So your risk management can be a little bit more, I won't say loose, but you have a little bit more wiggle room, right? So then after that, it alternates from doubling to 1.5. Another good thing about the company too is that if you make 10% in a day, they give you the opportunity to actually cash out or be paid that same day. So daily payouts as well. There's a bunch of other rules here. I won't go through all of them, but it's very fair. If you know what you're doing, you'd be able to actually come up using them. So that's what we're going to do. We're going to get into my Forex funds, and obviously we're going to fund our personal account as well and still do that. But I just wanted to make sure that I brought this up as an avenue for someone who is in a situation to where they were able to make a little bit of money, or you only have a bit of money. You can use some of these platforms, such as my Forex funds, to be able to take advantage of prop firm money. So if you have the opportunity, just go ahead and look at it on your own. Take a look and see what some of the things that they have to offer. It's not just the accelerated account. They have several other accounts, the rapid account, evaluation accounts. For me, I want to skip right past the evaluation. I've been in a situation with another company, or FTMO, where they do this evaluation and you make this money, and then you don't get paid out on any of it because of the evaluation, and I'm just not okay with that. So I would rather do the accelerated and have the opportunity to get paid immediately. So yeah, that would be all, guys. Again, as you see here, we are getting the sell-off. More than likely, we're going to see it really pour and have a really big sales leg. And I'm looking to take advantage of that. So happy trading, guys. Let's do it. It's my outlook for the week. Thanks.